Welcome to the Capital News. I am your host, Alex Kreitis. Today is Friday, June 4th, 2021. Thank you so much for joining me. An economic quagmire. Oh, no, that was yesterday's podcast title. Today's podcast title is May Jobs Report. Might as well be May Day because this thing is going down and it's going down hard. But they're not going to tell you that, but we will. So the May Jobs Report was released today. The number comes in at 559,000 jobs being added to the rolls for the month of May. And last month's figure was revised upward to 278,000. But this was below market forecast, which I guess averaged out and came in at 650,000. 650,000 was the forecast, which is a little bit mind-boggling, yet also understandable. And what I mean by that is, in April, they were projecting 1 million jobs. Maybe even a little bit more than that were going to be added to the job rolls. But we didn't come anywhere close to that, did we? No, 266,000 was the number, again, upwardly revised now to 278,000. So they weren't even close. So I don't know how much economic analysis this actually was by a lot of these market analysts. I think this was just a little bit more covering their rear ends because they had their rear ends handed to them last month with the numbers that they came out with and what the official number was from the Bureau of Labor Statistics. Not even close. So 650 puts them right in the middle, doesn't it? Well, if there's another negative surprise of 400,000, well, we're back in the 200,000 range. And, well, if it does hit that million, well, then we were off by another 400,000. So we just went right in the middle there. But, I mean, why even project what's going to happen? I mean, this is all nonsense. You really want to laugh. When I saw this headline come across the wire, and they said it was upwardly revised to 278,000, and I see that the number for May is 559,000, I said, whoa, wait a minute. That's almost twice as much. And it is. It's slightly a little bit more than that. So if you were to take the upwardly revised figure of 278,000, multiply it by 2, you get 556,000. Add a few thousand on top of it just to make it look like it's not, a round number. It's not evenly 2. And there you go. There's your number. I think that might be how they actually calculated the figure for the month of May. And I'm not joking, because the more and more I think about it, the more and more I am convincing myself that that's exactly what they did. Because you had that pathetic 266,000 figure for the month of April. And I said, well, markets were anticipating 1 million. We really gave it to them this time. Let's feed them a bone here. Let's throw them a bone. Let's double it. But, not exactly 2 times as much. Just click the keys and add a few thousand extra. And that's exactly what we got. Make the math work. Do what you got to do to make it happen. That's where we fall with these numbers. And I'll get into that report here momentarily. I would like to do a deeper dive into some of the employment metrics, such as the employment population ratio, the labor force participation rate, and just the total number of all employees that are counted. I don't know if we'll have time to get into that today. Probably not, as we make our way through the entirety of the jobs report. But I will have that discussion either on this weekend or next Monday, because it's important to provide these updates from time to time so the audience understands what's going on here and how much ground we still have left to make up just to get back to where we were before the pandemic and all of these lockdowns and restrictions. Okay? Like we're prisoners in lockdown. All right? Market performance, well, we're going to get to that right now. The dollar index sold off today, so it's been a seesaw ride this week for the dollar index, but at 90 spot 14, and this was broad-based dollar weakness across the board. The major currency pairs that I'm going to mention are all against the U.S. dollar, the greenback. So the euro put on a gain of about 1/3 of 1%. The British pound also put on a gain of about 1/3 of 1%. The Australian dollar really rallied, putting on a solid gain of 1%, and that is a huge move in the currency markets. And the New Zealand Kiwi put on a gain of about 0.8% of 1%. Bitcoin is currently trading in the green at $37,500 a coin. Now, because 559,000 was not a blowout number, it wasn't 800,000, it wasn't 900,000, it wasn't a million or a million plus, this still gives the Federal Reserve some cover. Oh, we don't have to start talking about tapering yet. There's still a long way to go. Yeah, this is a good number. It's an improvement on April, almost exactly twice as good as last month's number, but we're still not quite there. So we don't even have to have that conversation about the T word, taper. We don't even have to have that conversation. We don't have to think about it yet. So, of course, the crackheads on Wall Street loved it. Dow Jones Industrial Average closed up 0.5%, 0.5%, I should say. S&P 500 put on a gain of about 0.9%, and NASDAQ 100 put on a gain of about 1.75%. All of the major U.S. indexes closed in the green for the week. Pretty much, it was somewhat of a mixed bag across the pond in Europe, mostly in the green. One of the exceptions was the Spanish markets giving back about 0.5%. And on the commodity front, we have WTI putting on a gain to trade at $69.38 a barrel. Brent also up at $71.61. Natural gas also up almost 2% for the day, trading at $3.10. Gasoline also up slightly, $2.20. Gold and silver bounced back from their sell-off yesterday. Gold is at $1,890 an ounce, and silver $27.78 an ounce. So they know that the central bank is going to continue to prime the press, put the pedal to the metal, and they also, these markets, the precious metal markets, also understand the geopolitical risks, and I believe they're starting to price them in appropriately. Meanwhile, equity markets are not, because all they care about is central bank liquidity, and they continue to get it. As we discussed yesterday, the Fed's balance sheet hitting another all-time high. M1 and M2 money stock also continuing to make all-time highs. So that's all it's about. And this is causation, not correlation. It is causation. Take all of this funny money out of the system and let's see where equity prices are. Let's see how strong this market really is to all those talking heads on Bloomberg and CNBC that just keep talking these markets up. Let's take all of that funny money out of the system, tough guy, and let's see how strong these markets are. Copper is at $4.52 a pound. Lumber continuing its sell-off, generally speaking, $1,284 per 1,000 linear board feet. And traders also actually sought a little bit of refuge in Uncle Sam's debt today, ever so slightly. U.S. 10-year junk note is yielding 1.56%, still range-bound from where we have been for the past few weeks. Few months, Dare we say that this is some form of yield curve control, because after we got that massive run-up, this quote-unquote massive run-up in the yields on the 10-year and some of the other durations, Federal Reserve said, nothing to worry about, nothing to see here, folks. It's actually a good thing that yields are rising. It's indicative of a growing economy. That's exactly what we want to see. And then, of course, as soon as that happened, now it's been range-bound for a few months. You think this is a coincidence, or you think somebody's manipulating this thing? All right, so that is market performance. Now let's get into the jobs report. So, the employment situation, May 2021. Total non-farm payroll employment rose by 559,000 in May, and the unemployment rate declined by 0.3 percentage points to 5.8%. Notable job gains occurred in leisure and hospitality, in public and private education, and in healthcare and social assistance. First, to the household survey data. In May, the unemployment rate declined by 0.3 percentage points to 5.8%, and the number of unemployed persons fell by 496,000 to 9.3 million. These measures are down considerably from their recent highs in April of 2020, but remain well above their levels prior to the coronavirus pandemic, 3.5% and 5.7 million, respectively, as of February 2020. Among the major worker groups, the unemployment rates declined in May for teenagers at 9.6%, whites at 5.1%, and Hispanics at 7.3%. The jobless rates for adult men, 5.9%, adult women, 5.4%, blacks at 9.1%, and Asians, 5.5%, showed little change in the month of May. Among the unemployed, the number of persons on temporary layoff declined by 291,000 to 1.8 million in May. This measure is down considerably from the recent high of 18 million in April of 2020, but is 1.1 million higher than in February of 2020. The number of permanent job losers decreased by 295,000 to 3.2 million in May, but is 1.9 million higher than in February. That is a metric we like to monitor, so it is good to see permanent job losers decreasing by 295,000, but it is still stubbornly high at 3.2 million. In May, the number of persons jobless less than 5 weeks declined by 391,000 to 2 million even. The number of long-term unemployed, those jobless for 27 weeks or more, declined by 431,000 to 3.8 million in May, but is still 2.6 million higher than in February of 2020. These long-term unemployed accounted for 40.9% of the total unemployed in May. That is still a staggering figure and not a good one. The labor force participation rate was little changed at 61.6% in May and has remained within a narrow range of 61.4% to 61.7% since June of 2020. That is one of the metrics we will get into further either this weekend or next week. The participation rate is 1.7 percentage points lower than in February of 2020. Still a long way to go. I know 1.7 percentage points does not sound like a lot, but when we do that deeper analysis, you will realize that it is. The employment population ratio at 58% was also little changed in May, but is up by 0.6 percentage points since December of 2020. However, this measure is 3.1 percentage points below its February 2020 level. Again, 3.1 percentage points might not sound like a lot, but in the proper context, it is a lot, believe me when I tell you, and again, we will get to that. The number of persons employed part-time for economic reasons was essentially unchanged at 5.3 million in May, but is 873,000 higher than in February of 2020. These individuals who would have preferred full-time employment were working part-time because their hours had been reduced or they were unable to find full-time jobs. So that's a mixed bag there. In May, the number of persons not in the labor force who currently want a job was essentially unchanged over the month at 6.6 million, but is up by 1.6 million since February of 2020. No, not good. These individuals were not counted as unemployed because they were not actively looking for work during the last 4 weeks or were unavailable to take a job. So again, understand this well. They're not looking for a job, they're unemployed, yet they are not counted as unemployed because that is not how it is calculated. Among those not in the labor force who currently want a job, the number of persons marginally attached to the labor force at 2 million even changed little in May, but is up by 518,000 since February of last year. These individuals wanted and were available for work and had looked for a job sometime in the prior 12 months, but had not looked for work in the 4 weeks preceding the survey. The number of discouraged workers, a subset of the marginally attached, who believe that no jobs were available for them, was 600,000 in May, little change from the previous month, but 199,000 higher than in February of 2020. So still not good there either. Making our way through, we have the household survey supplemental data. In May, 16.6% of employed persons teleworked because of the coronavirus pandemic, down from 18.3% in the prior month. These data refer to employed persons who teleworked or worked at home for pay at some point in the last 4 weeks, specifically because of the pandemic. In May, 7.9 million persons reported that they had been unable to work because their employer closed or lost business due to the pandemic. Let me repeat this big number. In May, 7.9 million persons reported that they had not been able to find work or not have been able to work because their employer closed or lost business due to the pandemic. That is, they did not work at all or worked fewer hours at some point in the last 4 weeks due to the pandemic. This measure is down from 9.4 million in the previous month, so making some movement, but it is still a huge number at 7.9 million. Among those who reported in May that they were unable to work because of pandemic-related closures or lost business, 9.3% at least how did they write this? In May, that they were unable to work because of pandemic-related closures or lost business, 9.3% received at least some pay from their employer for the hours not worked, unchanged from the previous month. Among those not in the labor force in May, 2.5 million persons were prevented from looking for work due to the pandemic. This measure is down from 2.8 million the month before. To be counted as unemployed, by definition, individuals must either actively look for work or be on temporary layoff. On to the establishment survey data. Total non-farm payroll employment increased by 559,000 in May, following increases of 278,000 in April and 785,000 in March. In May, non-farm payroll employment is down by 7.6 million, or 5%, from its pre-pandemic level in February of 2020. Notable job gains occurred in leisure and hospitality, in public and private education, and in healthcare and social assistance in the month of May. In May, employment in leisure and hospitality increased by 292,000 as pandemic-related restrictions continued to ease in some parts of the country. Nearly two-thirds of the increase was in food services and drinking places, up 186,000. Employment also rose in amusements, gambling, and recreation, up 58,000, and in accommodation, up 35,000. Employment in leisure and hospitality is down by 2.5 million, or 15%, from its level in February of 2020. So still quite a ways to go. At this pace, it's almost another 10 months just to get back to that level pre-crisis. In May, employment increased in public and private education, reflecting the continued resumption of in-person learning and other school-related activities in some parts of the country. Employment rose by 53,000 in local government education, by 50,000 in state government education, and by 41,000 in private education. However, employment is down from February of last year's levels. In local government education, down 556,000, state government education down 244,000, and private education down 293,000. Healthcare and social assistance added 46,000 jobs in May. Employment in healthcare continued to trend up by 23,000, reflecting a gain in ambulatory healthcare services, up 22,000. Social assistance added 23,000 jobs over the month, largely in child daycare services, up 18,000. Compared with February of 2020, employment is down by 508,000 in healthcare and by 257,000 in social assistance. Employment in information rose by 29,000 over the month, but is down by 193,000 since February of last year. In May, job gains occurred in motion picture and sound recording industries, putting on a gain of 14,000. Manufacturing employment rose by 23,000 in May. A job gain in motor vehicles and parts, up 25,000, followed a loss in April of 38,000. Employment in manufacturing is down by 509,000 from its level in February of 2020, so still a long way to go. I mean, if we're only putting on job gains of 23,000 a month here, and we're still 509,000 jobs fewer today from where we were in February 2020, that's a long haul. Transportation and warehousing added 23,000 jobs in May. Employment increased in support activities for transportation, up 10,000, and in air transportation, up 9,000. Since February of 2020, employment in transportation and warehousing is down by 100,000. Employment in wholesale trade increased by 20,000 in May, mostly in the durable goods component, up 14,000. Employment in wholesale trade is down by 211,000 since February of 2020. Construction employment edged down in May, losing 20,000 jobs, reflecting a job loss in non-residential specialty trade contractors, down 17,000. Employment in construction is 225,000 lower than in February of 2020. So despite the rush to build homes in the non-residential space, you're losing specialty trade contractors. Employment in professional and business services changed little in May, up 35,000. Within the industry, employment continued to trend up in accounting and bookkeeping services, up 14,000. Employment in temporary help services changed little over the month, up 4,000, following a large decline in April, a loss of 116,000. Overall, Employment in professional and business services is down by 708,000 since February of last year. Employment in retail trade changed little in May, down 6,000. Clothing and clothing accessory stores added 11,000 jobs. Employment in food and beverage stores decreased by 26,000, following a decline of 47,000 in April. What's going on here in retail? Employment in retail trade is 411,000 below its February 2020 level. In May, employment changed little in other major industries, including mining, financial activities, and other services. Average hourly earnings for all employees on private non-farm payrolls increased by 15 cents to $30.33 in May, following an increase of 21 cents in April. Average hourly earnings of private sector production and non-supervisory employees rose by 14 cents to $25.60 in the month of May, following an increase of 19 cents in April. The data for the last 2 months suggests that the rising demand for labor associated with the recovery from the pandemic may have put upward pressure on wages. Interesting, isn't it? However, because average hourly earnings vary widely across industries, the large employment fluctuations since February of last year complicate the analysis of recent trends in average hourly earnings. All right. So let's pause here and note this, as they just stated. The data for the last 2 months suggests that the rising demand for labor associated with the recovery from the pandemic may have put upward pressure on wages. If this continues to be the case, what are all of these people who argue against inflation? Because this is sort of the last leg that they are standing on. Well, in order to see inflation, there has to be wage, quote-unquote, inflation. Wages have to go up. Well, what's going on here? Are they going up or what? Now, I don't think that has to be the argument that's made, but that's their argument against inflation. It's already here. Inflation is an increase in the money supply. We talk about this crap every single day. Look at the charts, they're vertical. It's here. Look at the food prices. It's here. What happens when food prices skyrocket like they are now? Revolutions, riots, protests, coups, you name it. As we discussed yesterday, and in that Bloomberg article, finally, mainstream media is discussing the fallout when you have such increases to food prices. Yet somehow these people want to be out there and they say, oh, there's no inflation. It's not here. It's not going to be a problem. It is here, and it's going to be a major problem for a long time. And we're not done. They are not done increasing their balance sheet in the money supply. They're not done. So that is something to be mindful of. In May, the average work week for all employees on private non-farm payrolls was 34.9 hours for the third month in a row. In manufacturing, the average work week rose by 0.1 hours to 40.5 hours, and overtime increased by 0.1 hours to 3.3 hours. The average work week for production and non-supervisory employees on private non-farm payrolls declined by 0.1 hours to now stand at 34.3 hours. The change in total non-farm payroll employment for March was revised up by 15,000 from 770,000 to a positive 785,000, and the change for April was revised up by 12,000 from 266,000 to 278,000. With these revisions, employment in March and April combined is 27,000 higher than previously reported. Okay, so there you have it, folks. That is the number. Of course, the fine print, the yada, yada, yada. If it wasn't for the pandemic and this crap and the other, the unemployment rate would really be 0.3 percentage points higher. So that would take us right back to where we were last month at 6.1%. Read into that what you will. But nonetheless, the number is 559,000. And all you had to do was multiply the revised number for April times 2, and you would have came close. Because that's how we calculate these government statistics in this first world banana republic in which we live. So a lot to digest as normal within this report. A lot of numbers I'm throwing out at you, reading it kind of fast. I understand, but I want to make sure we get through it in its entirety. And when they put these numbers into context, and I'm glad that they do, because they tell us, obviously, where we are today and where were we prior to the pandemic. And that's why I want to do that deeper analysis with respect to the employment population ratio, the labor force participation rate, and just all employees, okay, within the economy. Where those numbers stand, where were they prior to the pandemic? Where were they during the great financial crisis? Where were they in the dot-com era? When did they peak? When did they bottom out? How does that relate to where they are today? What does that mean going forward? What type of economic growth would we have to witness in order for these numbers to get back to where they were prior to the pandemic in a relatively short period of time? Okay, because those are important questions. Are we talking, well, we could get back there within a few months? Is that realistic? Or is it more like 6 months? Or is it more like 12 months? Or maybe 18 months? Or maybe even longer than that? Well, we're going to do that analysis. We're going to have that conversation because we are far from out of the woods. And the White House can spin these numbers however they want to. Politicians can spin these numbers however they want to. Same thing with central bankers. They're going to do it. That's what they do. They just have to fit their narrative. And with the central bankers, again, coming out and announcing that they have to tackle climate change too. It just boggles the mind, doesn't it? They can't handle the economy. They all think they're virologists and epidemiologists too now because COVID's here. And now it's on to the next thing. It's on to climate change. Now they're all going to be, again, meteorologists, environmentalists, climatologists. They're all going to be experts in all this stuff. It's never going to stop. So even if we should witness numbers like these numbers, labor force participation rate, etc., back to where we were prior to the pandemic, and that's going to take a while, believe me when I tell you. But even if we should get there quickly, it's not going to be good enough. It's not going to be enough. Now you have to concern yourself with maybe another pandemic that's on the way, or climate change, climate crisis, however they want to phrase it. And so they're going to have to do everything that they can to stop it, to reverse it, to finance one federal government after the next so they can take the appropriate steps to combat climate crisis. Okay, they are not done. They are not done. This is all they have left. They have to continue to find another excuse. You know why they got to continue to find another excuse? Because they're con artists. That's what they do. They always have an answer. They always have another story. Oh, we got to do this. Oh, we got to do that. That's what's coming. They're announcing it. They're telling us, telegraphing it from miles away. So don't be surprised when it actually comes to fruition. The question is, will the markets continue to buy into it, or will they finally say enough's enough? That day is coming. I don't know when that's going to be, but when it is, it's not going to be a pretty day. That I can guarantee you. So there you have it, May jobs report. You all learned something new here today. If you want to calculate the jobs number, all you got to do is multiply the previous month's revision number by 2, and you'll be in the ballpark. I wish I was joking. Stay diversified, stay vigilant, and stay with the Kapital News. I am Alex Karitis. Godspeed, and enjoy your weekend.